All right, good evening, guys. Ken at Tortoise Capital, the nightly strategy podcast for Sunday, June 13th, 2021. Hope this finds you well. Jens was interested in doing a course on protreptic coaching with me for us. So I'll be sending a note around to see if there's some folks that might be interested in being the student population for that. I don't know any details about how long it would be or how much it's going to cost. It'll be something reasonable. And it'll be focused, I think, on our orientation as traders. Doesn't have to be, but maybe the values and beliefs that emerge from trading, I think, are really well suited towards protreptic style coaching. So I'm going to try to maybe steer us in that direction, and I think make this part of the foundations course, and then open it up to more deliberate coaching into other areas. So interesting thoughts. Let's see. So Bob put a couple links to some very interesting articles in the chat room concerning lumber prices and, to a certain extent, the stock symbols for lumber have experienced some of the meme stock psychology from Robinhood and Webull and some of that, and so that there's been a tactical distortion between the price of lumber and the demand for lumber and the price of the stocks. And so there's some anytime you have those kinds of short-term distortions, that's going to create some trading opportunities in both directions. And in my view, the psychological insights that we get from applying statistics to price action is makes that an opportunity. So cut and wood remain on my short list of things to trade. And the Zero Hedge article goes into some of those details. So we got some charts tonight from Chi Weng Chong, some crosstalk between Garen and Ken H. Talking about the procedures and process of being prepared each week for the hybrid trading. Cliff, Ken H says CLF was also in Reddit. Maybe the secret is out. So we got to be, I think we got to be grateful about that. That's going to just help make our little trading symbol even more vigorous. But what that means is that the day trading is probably more valuable than the swing trading now because of the psychology boost that comes from the Reddit crowd. So we'll keep that in mind. Hey, Ken, if you get a chance, send me the link to where you saw Cliff in Reddit. Let me go do some sniffing around. Ken H then is going to give us the usual lineup of some amazing trade frames, for which we are very grateful. I also just wanted to say I thought your commentary on discipline and consistency, which you kindly allowed me to post on Patreon, I thought that was just right on the mark. And, it's going to work every day and getting that done. And I think that article you sent me on the 24 pieces of evidence about why trading is so difficult for the unprepared is not surprising at all. It just is, when you add the internet and fear and greed, it just makes people more of what they are, and those are the entirely predictable consequences of adding gasoline to the fire. You know, um, so so here we go. I'll just point out that Garen and Ken have found each other through the internet. They're like twin sons of different mothers when I talk to them both. And you'll notice their charts in the chat room and the clear evidence of adding skill and the way that they're using the public space for feedback and information exchange and documenting their learning in public. That's how you do it. Those guys are really working well together, so I want to commend them for doing that. You know, I say, posting your charts in the chat room is trading in public. It kind of is, but not really. I mean, it's about as safe a place as you can find with very high signal to noise ratio. Right? All right, so these are from Chi Weng Chong on, let's see if Chi is in today, Weng Chong. And we're looking now at a weekly, daily, hourly setup. I just don't know if you need much more than that for this intermediate range of trading, where you're straddling the swing trading and the day trading time frame, and that it allows you to see things in the time frames that you can act on them. And the weekly chart reminds you of that long-term posture and big money. And the hourlies is a nice multi-day snapshot of the short-term trend, and then that day trade in the middle kind of gives you the perfect pivot point to see which way you want to go. So in Caterpillar, what we're seeing, obviously on the left-hand side on the weekly, is just the tremendous run from 165 to 250. That's a 50% move from the start of the year, and it's had a couple 10% pullbacks on its way up, and then you'll notice the doji last week, and then this week the big smackdown from 245 back to 220, inches above the Bollinger Band mean with a very weak close. So that feels like a different collapse than in previous weeks. And when we look at the weekly PSAR, we say, oh yeah, that's why, because none of the other corrections ever penetrated the PSAR. And so even if you had that swing trade with the edge of the river, you'd have been very happy, or the PSAR, you'd have been very happy, because those would have given you exits at 233 or 230, which would have protected you $10 or $15 of additional losses, which is about a 2%. No, it's more like a 8% benefit just by taking the PSAR or the edge of the river. That's a nice way to protect the long-term positions that you can end up building on your long-term bucket. When you're riding these shorter-term swings, or you're generating money intraday, like on the Z3 pinch breakout and a collapsing dragon combination. When you generate money from that in order to build longer-term positions, you can get lulled into that, and the discipline of the weekly PSAR or the weekly southern skin of the dragon really keeps you from falling in love with that position. That saved our bacon with PBW, the clean energy, which had gone from 28 to 140 last year. And the discipline of the weekly stops ended up getting us out around 120, and that thing has then subsequently sold off into the low 80s, and it's now starting to come back. But the discipline of the weekly long-term protective stops really preserve the capital of that big win. So when you pull a whale in, you really want to preserve those great big wins. It's sort of like the old man in the sea. It's not enough to catch the whale. You got to deliver it and set some aside for the future. So the big sell-off in CAT really gets our attention. It tells us that, this is a fresh start going to the right. We have to appreciate the fact that that great company had a great run, but now that phase is over, and now it's kind of back to the tactical trading until proven otherwise. Now, it's a good thing for the long term that it stays above the Bollinger Band mean. And so 210 is really the final protective stop for this move, where you could genuinely pick up a short side bias if it breaks below the Bollinger Band weekly, right? Bollinger Band mean on the weekly. So until then, we have opportunities for short-term tactical trading, and so these red lines that are indicated here reflect where you get increasing confidence and position size on the tactical trade to the short side. But it's really not until it falls below 210 that we can say the short side bias is indicated with a view towards the long-term fair value of 180 on that weekly RL270 and the bottom of the river. So there's really a couple phases going on right now. As long as it's above the weekly Bollinger Band mean, my orientation is enjoy opportunities on the short side, but look to see where it may be finding support levels on the daily for potential bases of support that become SSCs and CATA 2s. Like this one here around 180 is certainly there. That's that long-term fair value you see on the weekly. And then certainly, in fact, right in here, around 220, it would not be surprising to find that kind of support. And so now that we have this excursion down here beyond the Z3 that closed very poorly, one of the least surprising moves would be a continued tactical weakness like this pullback, and then followed by a series of rising CATA 2s to get back to something like fair value around 240, or even if you look at the daily RL270, 245. So on a statistical basis, the mean that we're thinking about it's got to return to is going to be about 240 until proven otherwise. I would also say 230 looks like a solid price target to the upside. So we're talking about a $10 recovery from 220 to 230 and maybe 240. So 10 plus 10. So possibly a $20 upside, which means that you could afford to have like a $7 stop on this one for position sizing, which means that if you ended up buying it, let's say around 220, then your stop would be down here below 230 or 215. So right, 213. So that would give you a wide enough stop that you could think about having some kind of buffer. Now, if we were in the when we drill down to the weekly, we notice that the 30 hourly. Yeah, we're noticing that collapsing dragon. That in the last 4 hours of the day on Friday, there was like one final gasp of selling, and then some buying pressure comes in and stabilizes at around 220. So I would agree with this trade framing at about 222. Certainly that's a sign of increasing strength, as that's like a 4-hour high. I like the fact that it ended in dojis and there was very little further downward pressure. So maybe 220 is the psychological price level. So if you're getting long at 222 and your stops at 218, that's $4. And then if we use these frames over here and say that 10 and then $20 to the upside is not irrational. So $10 gets you to 232, which is essentially the Bollinger Band mean. So $4 to the downside, $12 to the upside. That's like a 3-to-1, and you're in good shape. And I wouldn't disagree with this would be a PSAR reversal for a second entry. Yeah, I think if it got above 226, then others would see that as evidence of this feels like the first half of a cup, and then a cup and handle later on. So that one looks solid to me. I think if I was wanting to be short on this one, it wouldn't. I think on the intraday get shorter around 220 rather than 218. 218, I think, is pretty clear that you've left this consolidation behind and it's dropping. That's another 1% drop right there. So I think if you wanted to be aggressive on being short Caterpillar, that you could start that at 220 and then reinforce at 218. It's tough being short a great American company like that, but notice that you've already left behind from the daily this massive support level in here. And now there was a lot of volume being transacted in here around 220. This is a major turning point. So if it does break below this, you're at the extremes of the volume on that volume at price histogram. So if that breaks, then suddenly there's a lot of opening in here for people to run scared south and then to pick up some buying pressure around 205. So that's why I'm saying if it breaks below 218, surely you can be short, but I'm thinking you may also, if you're adept, be able to be short at 220. So the upside and the downside are clear on this one. I think you could be a little tighter on the hourly breakdown and be even a little more aggressive. But on the upside, I wouldn't argue with the $4 risk at all. IWM has shown some signs of life, and in the Dow Jones Completion Index, which is a mix of small caps and mid caps, that's already back up to all-time highs, and so the underlying companies in the small caps and mid caps are charging back in the U.S. And you see that long sideways chop in IWM. This is the next run up to test that previous all-time high. It's already better than it was 6 weeks ago, and it closed well. And now you can see that even more clearly on the daily, already up here around Z2. And so I like it at 232 and then making this next run. Now it's got to get through 236, which is a 2% move, but it's certainly within reason. And this is a nice long-term consolidation zone for it to work. And even if you use the wide stop of, say, long at 232 and short below the, and a stop down here by the PSAR, you're talking, let's see, 223. That's about, $10. That's a 5% initial risk on a swing, and that seems perfectly reasonable to me. On the daily, if we're long at 232 with a stop at 229, that's $3. That's 1.5%. That seems reasonable. Adding a second position here almost feels premature at 234. If I was going to add a second position here, it would only be because I had made nice money on it in here, and now the justification for that is that it's breaking above. It's not even quite breaking above the hump of the dragon. I think I would wait to 233. Like this next one here, I think is better. So yeah, first position Wait for that second position to clear this hump at 234. Yeah, that's where you get this. And then this last one is clearly a Z3 pinch breakout and an RL10 emerging dragon breakout, and you'd be comfortable by having 3 positions by that time. On the short side, tactically, and if I'm trading futures, I want to start getting short around 230 rather than 229, because I'm taking advantage of, like, if this started to roll over, then this would be a pocket and a collapsing dragon in here, rather than waiting for the full collapsing dragon. I might, on a shorter term basis, like on a 1 minute or 5 minute chart, might try to get that short, because then you'd see a high and a lower high, and then this would set up for a downward move to 226. So those all look good. Clear turning point, critical state in the Russell. Tesla, now it's just, the days of 900 are long gone. And now this is really just a tactical trader. Strong support around 600 on the weekly. And the upside opportunity as it breaks above the Bollinger Band mean. This is a clear COTA 2 with a $10 stop, $20 stop. I like it. I'd rather see you try to get this started at about 610 rather than 617, because I think it on the short-term trade, if this starts moving, that first burst in the morning can get you paid already, and then you can decide how much you want to keep. So I think I'd look at starting this around 610 and the PSAR break instead of waiting for 617. And then 635 is within range in a single day if we get a burst move. Short side, 593. I think as a tactical trader, I think you could start looking at the short positions in here around 605, and if it breaks below 600, you'd see another sharp burst like this here. And then I might be ready for a intraday reversal. Like if you saw a bunch of weakness to shake people out and it held support and then started to reverse, I think there's an intraday trade in there as well. But I like it long term the way you've laid this out as the Tesla swing, and then I think you're really looking to see it get back around 680 in this cluster in here. CRM. So these are Ken's. This is weekly, daily, hourly still. CRM is grinding out of the mud after its big sell-off from 270 to 200. You see the COTA 2 and the nice swing that held and now began to work again after it held support at what was once resistance is now support. So that really now makes this attractive at 240. And then if you can get it above 243, should be free and clear. So I like that frame there. And then on the downside, a breaking of the PSAR tells you the target would be the base of the PSAR and the RL10. And then I think you could get a second position at about 236 instead of waiting for 233. I think I'd play that short here, second position, breaking at the belly of the dragon. I like it in both directions. Good frame. This is blended commodities. Just that's inflation right there, and the restart. It's a combination of inflation plus restarting economies, which is what in theory all that money was doing. Nice pullback, ended in a small range doji at the hump of the dragon and ready to go. Heck yeah. Nice tight stop, and that's going to get a boost from both energy and ag, ag is benefiting from the global drought, food prices going up, and it's benefiting from gold and silver. So this should really do well from a number of possible contributors. Energy, base materials, precious metals, and ag, all four of them have the opportunity to contribute to this to the upside. I would like that one more than I would trust the downside. It just, man, the downside moves are so short-lived, and then the smashing recoveries that I don't want to stay long this one too long. I just think there's too many macros in play to the long side. Boeing, stable on the daily, pausing on the weekly. Yeah, this feels like it's still got a lot more grinding to do. The downside feels easier because it's had, 9-10 days to really make a run higher than the previous hump of the dragon. It's just not getting it done. I think you could try it with with a 10-cent risk in DBA here. Did I say Boeing? I'm sorry. I mean Ag. DBA. I missed the D. Yeah, I think the upside is easier to see. The downside is clear also. Great, great critical state. Energy, Devon Energy here. Great opportunity on the pullback to 29 and ends in a doji. It's still trying to preserve all of those big moves. So everybody that bought it 10, 9, 8, 7 days ago would love to see this recover. And it held on Friday. Boy, that's going to be a high priority intraday trader next week in both directions, because if it collapses below 29, look out below. But if it breaks above 29.40, look out above. Man, it doesn't get any better than that. We'll come back and visit that one every day next week. eBay, rising lows. See the power of the Kata 2s, and now the breakout of the emerging dragon, and this thing is ready to just keep going. Just going. And great frame in both directions. I don't need to say more on that one. Perfectly done. Power of Kata 2 and the SSC. Jiminy Crickets. Apple is showing a starting for a Kata 2 on the weekly, a clear Kata 2 on the daily, and if we see any kind of juice coming into tech, in spite of their underperformance and some technical problems in delivering new products, it's still Apple, and everybody believes in them. That there's some goodwill built in, and if it gets back to 135 and you didn't buy the breakout from 127, that's going to make you sad. So I think that's the play. The short below 125 is also clear. I could see it, short at 126 even. Yeah. You could probably convince me to be short at 127 and play just the inside short game in here. But clearly, if it breaks out below here, the RL10, that's decisive short. ARC Innovations, it's the same chart, only better. The short-term breakout says it's back. It's got a clear run to 124, and that's $8. So if you have that's only $1.50 of risk on that breakout, and off it goes. Heck yeah. And that's it's just getting ready to start. It's SSC on the weekly, but it's already had a significant recovery from 100. So I think that the downside protection is safe there. $4 or $5 on this risk to 110, and $1 risk in here. That's a high pry. ARC Finance versus, ARC Innovation versus the broad S&P tech. This is postured for a nice recovery. Tech itself is in a recovery mode, and so now the speculative tech is also postured for a moment of accelerated gains relative to the broader tech. So I think that sort of says the recovery in RK is legit and can be traded. Squarespace, Disruptor, nice critical state on the weekly. You're just getting started on the Kata 2 on the daily. The next leg up on the Kata 2 on the hourly is also clear. I think you could get this at 220 instead of waiting for it to break out above the RL10. I think I'd get it at 220. I just feel like that one is postured to benefit because they're actually making money on crypto. I think I think that one's safe to the upside. XPEV, the Chinese electric vehicle, that's state-sponsored support right there. And if you don't believe in the Kata 2 and the SSC, then I just wonder why. I mean, no clearer signal than 26 with a stop down here, and now it's at 40. Oh, Christ. Jiminy Christmas. And, the Kata 2, just... If you think China is going to let XPEV fail, you have not read history. That thing's going to 55. Trade that one. MCD, McDonald's. Daily breakout at a critical state up in here. Yeah, I think you got to like that one. Solid moneymaker. Home Depot. At the end of a beautiful sell-off run back to 310, holding steady. The supported spring crossing is just getting started. You have to be long not later than 315. So just put that order in the book right now so that if it breaks above 315, you don't have to remember to do it. It'll just do it. And you make it a $10 3% risk. Just put that order in the book now, I say to myself, because I'm not going to give advice. And then you can play the tactical play from 311 onwards. So if it gets above 315 on the hourly, then that's where your longer term swing trade starts kicking in. So you can play it tactically now from 311 to 315. If it gets above the hump of the dragon, you're long. And second position above the hump of the RL10, and then that's going to be good to go with a $2 risk. Sure. Nike, at the bottom end of a long sell-off, a long grinding sell-off from 150 to 130, so that's a 20% sell. Just starting the 2-day recovery after an excursion down to Z2. And here is your supported spring crossing on the hourly. Tentatively good with a target of 135 on the tactical trade. And if that works, you can start thinking, after it gets above 135, you can start thinking about converting the day trade into a swing trade. But there's a lot of resistance it's got to get through there. So you can play that tactically short term, and then start keeping some once it gets past 135. Last one, Goldman Sachs, the strongest symbol in what had been the strongest sector. Profit taking from 392 to 372. 8% sell-off, held a nice intraday recovery. SSE starting at the same level it held support before and ran to 395. So you're looking at an 8% gain to the upside, $20, and only a $3 risk. Psh, no brainer. And if it fails below 375 plus weakness in finance, it's coming back down into here. I'd rather play that in the leveraged financed ETF than being short Goldman Sachs. But Goldman Sachs is on sale right there. And if you think they're going to allow them to fail, you'd be wrong. Great opportunity right there. All right, guys, that's everything I got for you. Let's get this published and posted, and I'll give you some more info on that protreptic coaching once I hear from Jens. So thanks a lot for the great work from Ken and Garen and Chi Wing Chong. Really well done, guys, and we'll see you tomorrow.